What's going on, guys? We're back like we never left. So, I'm actually going to walk you guys through Friday's trade. Hopefully, you can hear pretty good through this. I know it's going to be a little quiet, but deal with it. No, I'm just kidding. But let's go look at some things. I actually passed my first funded account this week. Um, you guys can see funded right there. Boom, boom, boom. You know, um, it was pretty nice. I'm really thankful to Jesus for helping me get through that because let me tell you, it's been a lot of trial and error. So to finally pass my first felt really nice. I know I've literally like been in hiding for a few months now, but just just had to do it. I had a lot to learn about myself in the market. Anyways, we're going to step into Friday's trade that ended up getting me funded. This did go for 2-1. It went for about 80 points. I needed 56-ish. Needed like 1155 points to actually get funded. So I didn't take a trade that ended up going for 2-1 for what I was initially risking. But we had no drawdown. And yeah, let's get into it. I'm going to change the color of this just so. Actually, no, I'm going to change the color of this so you guys understand what we're looking at. Probably shouldn't be green, but it's whatever. Okay, so initially, my bias for Friday was calls. I had a bullish bias mainly because Friday we usually retrace back inside of 20 to 30% of the range we've made over the week. And also, we had moved like 2-ish hundred points overnight. And whenever we get a move that's over like 150 in that 200, 300 range, we're not going to push back down. We might move back to around open, like you saw we did here, and we ended up pretty much holding it, the opening price that we formed, and then just took off higher for the week to end. So let's get into this. This green line that I've marked out, just remember that. It's a little 5-minute gap right here that ends up getting inversed on this 10 a.m. candle. Now, my draw is really, this is like a really powerful buy side, but my draw that we're initially going to get back to that I promise you we will see probably before the next leg down, honestly, is this 20,156. Anywhere between that 147, 207 area. We've got a literal liquidity void. Like we gap down to open on Sunday night, hopefully like we do tonight. And we just never filled it, which was really surprising. So we'll definitely return there and see it at some point, whether that's this week or next week. I don't know. It will be before April, is my guess. But that's just, hypothetical. This is not financial advice. Anyways, we get a breakaway gap right here going into this 10 a.m. news, which was consumer sentiment on Friday, and we get a really nasty reaction, like actually egregious. And we get a volume imbalance right here that I'm not going to chart out for you guys. You guys can see it, it's really obvious. And that same candle right here, that 10 a.m., gives us the 1-minute inversion gap that you see right here. That was the first thing we looked for. I mean, the SIBI was we just broken away from it. I wasn't watching it because it was a breakaway. I don't chart those out. I can just see that visually. But I did chart this out because we had touched here, and that ended up taking us higher beyond what I have right here. I have it like this because it was touched, but this was our news high from Thursday. This was the PPI high of the news candle at 8:30. We never swept it. We never touched it. We just took off lower after that. And we finally returned to it Friday morning right after open. And then we got this 10 a.m. candle that just shocked us down. I have my market structure shift here because I like to look for those on a 5-minute. 1 minute's a little finicky for me. You could have said, just for instance, you could have said this was your market structure shift if you're looking at the 1 minute only, and then went right here and been like, is this a market structure shift? Could it be? Um, well, it wasn't. That would have changed your bias back into calls, and you would have missed the actual play that we took. stay 5 minute time frame and above for market structure shifts, just to make sure you have a better, fuller picture of what's taking place. And then after you've went there, you can go down to the 1 minute and start to navigate things a little bit. If you're really understanding the concepts that you're looking at, maybe give you an idea of what the 5 minute is going to show in the future, what the next leg might be. So enough with that. Anyways, we end up marking this out once it returns back up here as a sell side imbalance, buy side inefficiency. It's just a down close candle that forms a fair value gap. We fill it very nicely, almost get to the top, not quite. You see, I don't do it just to this wick because there's a volume imbalance there. So include that in your fair value gap. You guys know that if you've watched any of this. That's not too new of a concept. And we get a nice reaction, hold the midpoint both times, exactly what you want to be seeing. We also hold the inversion fair value gap on both these candles. And this second candle right here becomes our entry. I've seen us hold what was a breakaway gap. We've had our higher time frame market structure shift. We've taken buy side liquidity. You could have said that some minor sell side was resting here, but like to say, I would have wanted to see something like this. And obviously, right down in here was really where I wanted to target if we were going to go lower, although the possibility didn't seem that probable. But we didn't need a lot out of this trade, and we had a pretty good amount of volatility in the market. So, 50, 60, 80 points becomes pretty easy in these conditions that we've had recently. The last little piece that I was looking for was this gap to get in first. And this close of this candle actually becomes my stop. I put it above this high because I could have went above the SIBI, but I didn't expect to return into it at all at this point, having these three confluences. And then if you really wanted to get down and dirty with it, you could have even said we had a 1 minute order block resting right here out of these two candles. And you also could have said we had a 5 minute resting right there. So, you had about 5 confluences going for you on this trade. 6 if you take buy side being taken and sell side not really having been touched yet. So, felt pretty confident in our down bias. Needed, like I said, 55 points, I believe, which was right on this candle somewhere in here. I had no reason to hold on longer than that. That ended up passing our account. But as you can see, we never take this low out, which would have been a little bit of a long shot to target, just knowing the environment. Seeing this body close above this body, I would have had no problem targeting where this minor buy side would have been resting, just because of how quick it was to go down there and push back up on that news candle. So that's 90 points, a little bit over 2-1 there. It does get hit. You have basically no drawdown. Like 2, 3, maybe 4 points of drawdown. Just barely would have cracked $100. Like to say, I took it off right in here around 55 points for about 1 to 4. Even right in here, low hanging fruit at this new day opening gap, you're almost getting your 2-1. So it was a really solid trade on Friday. I was really happy with it. I think inversion gaps are going to be what I focus in on. It got me through the whole week. See if you guys can see it. Yeah. This was my old account that I passed just over $3 grand on a 50, and that gave me the new funded right there. So I'm super excited to see what happens this week. Let's scroll out and see if we have anything that we should be looking. Let's go 1 hour. Make it easy. Obviously a ton of unfilled imbalances. Got one here, got one here. And this is the liquidity void I'm talking about. I know. Let me take this off. You guys will be able to see a little bit better. We close here, we open here. Consequent encroachment midpoint was never touched. We got a little bit of a wick into it. So you've got literally from here to here as a literal liquidity void. You've got 40 points just sitting there that hasn't been touched. It'll return there at some point or another. I very highly doubt we will get up in this area. especially up in this area. I don't see it. I mean, these are really nice buy sides. Like if I was bullish, I would think these were super strong draws. But I think we have just too much going on a world stage, a global scale, to really have any chance of getting up in here. I'll give you a little bit of perspective on the daily chart. This is something I enjoy looking at. The 200. The 200 EMA is all the way up in here on the daily chart. That's ridiculous. I know it looks a little bit better on SPY. It's actually sitting right in the middle of that liquidity void. And this is not financial advice, but if you get to the 200 day and it's still in the middle of the liquidity void, get a put. Get a SPY put, get an whatever you trade. Get a put there. Week out, month, whatever you're comfortable with. That's a great spot to short intraday, intra-week, maybe even intra-month if that ends up being somewhere we find ourselves around end of March going into April with new tariffs taking place. So, yeah, I hope you guys enjoyed today. I hope you guys actually kind of understood what I was saying on I don't know where I'm at, on the trade that I took on Friday. I hope it was helpful. I know it's kind of a lot to throw at you at one time. And I'm going to maybe start live streaming or just trying to get back into posting daily trade recaps, really. But I hope you guys enjoyed. I hope it was helpful. And I hope that I will see you guys soon. Be safe, trade smart next week, and make yourself a bag.